Welcome back. I'm Alexander Elliott. And in today's episode, this is episode 4, we're going to be talking about real estate, specifically the tax advantages available to homeowners and rental property owners that most people either don't know about or they don't take full advantage of. Okay? Real estate is one of the most tax-favored asset class in the entire U.S. tax code. That's a lot. The government essentially wants people to invest in properties, so they built in a remarkable set of incentives, okay? We're going to walk through some of them, all right? So, advantage number 1, okay, is the mortgage interest deduction. If you own a home, you're itemizing your deductions. You can generally deduct interest payments, your interest payments on your mortgage, up to $750,000 of mortgage debt or interest. For a new homeowner, especially in the early years of the mortgage, when interest makes up the bulk of the payment, it's normally 80-90%. This can be a significant deduction where we're talking thousands of dollars potentially coming off your taxable income, which is, okay. Advantage number 2, property tax deduction. As a homeowner, you can deduct your state and local property taxes. However, there is an important limit here. It's called the SALT deduction. That state and local taxes is currently capped at $10,000 per year, which is, I don't know why they came up with that, but anyway, $10,000 a year for single and married people filing jointly. So if you're in a high property state tax, you will want to factor in that cap in your planning. So before there wasn't a cap. Anyway, advantage number 3, the home sale exclusion. This is great. This is one of the most generous tax breaks in the entire tax code. If you live in your home as your primary residence for at least 2 years out of 5 years, you can exclude up to $250,000 in capital gains from the sale of your home, okay, and from your taxable income, or $500,000 or $500,000 if you're married jointly. So if you bought a home for, let's say, $300,000 and you sold it for $700,000, a married couple can potentially pay 0 federal tax on that $400,000 gain. Okay, that's extraordinary. That's a great benefit or deduction. Now let's talk about rental property, because this is where things get really interesting. Okay, so advantages, okay. Number 4, rental income deductions. When you own rental property, you can deduct a wide range of expenses from your rental income before you're taxed on it. We're talking about the mortgage interest on the rental, property taxes, insurance, okay, maintenance and repair, property management. You have a property management company that's dealing with the tenants, and even travel expenses if you have to visit the property. In many cases, these deductions can significantly reduce or even eliminate your taxable income, your taxable rental income that you report. All right. Advantage number 5, depreciation. This is another great deduction. This is one of the surprise most new landlords. The IRS allows you to deduct the cost of the building, not the land, but the structure itself, over 27.5 years. This is called depreciation. It's what they call a non-cash deduction, meaning you don't have to actually spend any money each year to claim it. Okay, you just have to own the property, and it depreciates on paper. Okay. Say you own a rental property and the building portion of it is worth $220,000. You divide that by 27.5 years and you get a $8,000 depreciation deduction every single year. That's $8,000 that'll reduce your taxable rental income without you spending an additional dollar. For investors, they're in the 22% tax bracket. That's $1,760 in tax savings per year, every year, just from owning the property. Okay? Advantage number 6, the 1031 exchange. If you sell a rental or investment property and you want to avoid paying capital gains, taxes on the profit, you can roll the proceeds into another like-kinded, that's very important, like-kind property using what they call a 1031 exchange. There are strict rules and timelines. You'll typically have 45 days to identify replacement property and 180 days to close. But if done correctly, you can defer the capital gains indefinitely. Some real estate investors have used the 1031 exchange to build enormous portfolio while deferring millions of dollars in taxes. Okay? Advantage number 7, passive activity losses. Okay? If your rental property generates a loss for the year, meaning your expenses exceeds your rental income at that point, that means that your rental income was tax-free. Also, you may be able to use that loss to offset other income. Okay, there are income limitations here, but if your modified adjusted gross income is under $100,000, you can deduct up to $25,000 in rental income against other income, like your W-2 wages. Okay, that allowance phases out between $100,000 and $150,000. Real estate professionals who meet specific IRS criteria may be able to deduct more. Okay? Here's the big picture. Property owners, every dollar you spend on a legitimate rental expenses is a dollar that reduces the income that you're taxed on. Keep track of everything. Keep receipts. Log in your repairs, your calls. Keep track of your management fees, your insurance payments, okay? Keep good records. Whether you're a homeowner and getting your first taste of real estate tax benefits, or a landlord with multiple units, understanding these advantages is how you keep far more of your income, or far more your income that your property will generate. In episode 5, we're going to be shifting to investment stocks, funds, dividends, and how to structure your portfolio to minimize the taxes on your return. That one is packed with action strategies, okay? So don't miss it. Also, we just added the client library to our website. It's under client resources. We have tax and accounting topics. We have articles. We have white papers. We have educational materials. We have videos. Also, we have a free monthly financial and tax newsletter. So be sure to sign up for that. And it's all free. All right. So I look forward to seeing you for episode 5. Have a blessed one.